Could we ever get regulation that can actually manage the banks that are of such a huge scale, of such huge complexity? You yourself have often talked about the need for the big institutions to be too good to fail rather than too big to fail. Can they ever be too good to fail?
I think we can change the nature of supervision and regulation. I've advocated this for quite a long time. And by that I mean that we need a supervisory authority that oversees major financial institutions. Now, in the United States, that may consist of 30 or 40 institutions. These are institutions that probably are too big to fail. I really think the supervision of financial institutions, of major financial institutions, requires deep skills in accounting, in credit, deep skills in risk analysis techniques, and it requires within that organization very skilled, trained, professional people. That is lacking in the supervisory area in the United States.
Do you think that will happen soon?
I think it will happen someday because the markets will force it. If we don't improve the supervision and oversight over financial institutions, in another 7, 8, 9, or 10 years, we may have a crisis that's bigger than the one which we have today.
Right. But I suppose some of these concerns that you're expressing about banks in general,
Yes.
that all banks must, were subject to these pressures to continue to expand, to continue to seek profits while the credit markets were booming. How do you curtail that desire to make the most of the good times?
That is the conundrum that sits in the financial markets. And that conundrum was really exacerbated as we securitized more financial assets. And so you have a system in which middle management of an organization becomes very important. The trader, the investment banker who does the deal, and who are motivated to do more and more because the more they make, the higher their compensation. And that causes an infestation into the thinking of senior management that's been difficult to control. And was contributed to by the use of quantitative analytical techniques, which are supposed to measure risks in the system.
Is it really possible to turn back the clock in terms of the reliance on quantitative techniques? I mean, it's not just banks that rely on them. Huge numbers of investors rely on them. It's become conventional wisdom across the board. And also you mentioned the securitization, complex securities. Yeah. Can you turn back the clock on those developments too?
No, you can't put Humpty Dumpty together again and go back to what the financial system looked like 30, 40 years ago.
Right.
That's gone. We live in securitized markets. We live in global markets, which we also don't want to recognize really that well. You can't, but you can put in place restraints and limits on these activities, which we haven't done up to now. The Basel agreements and so on capital are really very limited techniques. And I again want to stress, this is a global financial system.
Yes.
So what we do here, in one way or the other, we have to have more unity in major money market centers, rather than just New York or the United States, without forgetting the UK, without forgetting the continent.
And so is compensation the key?
Compensation is certainly a critical issue. And we haven't really addressed that yet. Now, to be sure, at the end of this calendar year, compensation will change dramatically.
Right.
Because of market
It'll be a lot lower.
Yeah, it'll be lower. But that's not really dealing with it.
So is there anything to be optimistic about as we sit here at this stage of this financial crisis?
Yeah, I think we're working through it.
So it's good that people are recognizing
We're
things early on.
Yeah, we're working through it. There's more work to be done. There is going to be some reform of the financial supervision and regulation. Hopefully it will be along my lines rather than the big compendium of suggestions that came out of the U.S. Treasury.
So you don't think those proposals are the right way to go? The Paulson proposal?
I think the U.S. Treasury's proposals lack focus. And it's put forth like a menu, and for the government to look at, to review, and to evaluate. That's the way I look at it, rather than a detailed statement of proposals that are going to be submitted to Congress, and Congress will say, this is it. I don't think that's it. And you have to remember that we do forget unless we change supervision and regulation and practices. You take in 1990 we had a crisis. In 1998, all of a sudden another crisis. Then in 2000, and here we are 7, 8 years later, another one.
Yeah.
So it's very easy for market participants and others to forget what just happened.
And is it the severity of the crisis and the fact that banks are so affected that might actually push people to take measures so they don't forget?
Well, you raise a very difficult issue of, will the markets reform themselves? And my response is, no, the market cannot reform themselves, because there is, in the market process, there isn't anything that's unique so you can have a patent on it. So after a while, everyone can be in it.
Right.
And usually what's happened is that financial markets move to the competitive edge of risk-taking, unless there is some constraint.
Yeah.
And I think markets will continue to do that unless there is improved supervision and regulation. And that's where the dilemma lies going out. But that's not the issue right now.